kind of what you're working on, because you have an interesting concept called Bitcoin bonds. Okay. And so I'm going to throw this up on the screen. You have this tweet here, talks about Bitcoin bonds, 1 billion to be raised, 800 million goes into the 5-year note, 200 million goes into BTC. Bitcoin goes to zero. You have to kind of explain that, right? Upon maturation of the note, lenders, 800 million gets paid back the 1 billion. This means principal amount loaned is protected by lack of credit risk to U.S. government. But bigger deal, right? Bitcoin performance becomes the note yield. Bitcoin price doubles, yield paid back is 8%. So give it, are you like a finance guy? Are you in Wall Street, like talking about bonds? Give us kind of like what the idea was and like what the architecture and what your goal is here with this.
Yeah, so I never needed to make it that far. That's what I studied. That was, I would say, when I was in school, by the time I figured out what I wanted to do and started to get aggressive with my studying, I wanted to go into business and finance. So I do have a background there, but I never, because I was in Bitcoin, I never had the obligation to go and do that. Bitcoin did the hard work for me and provided that way to kind of escape that debt slave circle. So that gave me the freedom to really just study. And then when I mean study a lot of financial history, a lot of business history, fiat currency history, just anything that's related to finance and business and like the start of banking. That is where I've fully focused all of my efforts. And then just, small steps at a time for a long time over the years, you start to build up this greater understanding, orange pill after orange pill after orange pill. And finally you're like, is it ever going to stop? And then finally you come to the point you realize I can never know everything about Bitcoin and money and finance. So I just have to continue to try to learn as much as I can, with the understanding that nobody will ever be a Bitcoin expert, because there's just so many first order, second order, third order, fourth order effects that go so deep into our culture and to our society. And then it really all traces back to money. And I wish people understood that better, because if they did, I'll steal that Ford quote. If people understood how money and currency works, there'd be a revolution tomorrow. So that's really what I want people to understand, is like, there's a different way to go about doing finance. We don't need the old school fractional reserve banking, central banking business model or culture model or economic model. At this point, it's almost laughable how much they've changed definitions. Like, you tell people about inflation, they automatically think, oh, if we have inflation, we have a strong economy. Inflation has nothing to do with the economy. It's a monetary phenomenon. So these ideas, they just get stretched every which way. And my goal in studying all this was just, on my personal journey, was to understand, wow, I need to forget everything that I paid to learn and kind of just reteach myself from square zero. And that gave me a big advantage, because it's almost like, now my guideline was truth. It's Bitcoin, it's truth money. So I know when I start to get too far away from that, my spirit can tell me, whoa, you're, hey, you're going to a centralized XRP ledger,
Mindset,
come back. Yeah. So it's the same thing in finance. A lot of these products, like in traditional finance, and this is why so many people are confused today, because real interest rates are negative, but it makes sense to save your money. It makes sense to be a lender, and then you should be taking risk as a borrower. But if you think about that, you and me and everybody else, all of your listeners, we the people, we are the lenders. The government is the borrower. They're the largest borrower in the world. So of course they've rigged the system. A free market system would benefit the lenders and put the risk on the borrowers. But they have manipulated the system so much, they have rigged the system so much, that it actually makes more sense to be a borrower and less sense to be a lender. And if your listeners are like, well, that doesn't make sense. Well, just think about this. What if you bought a house 10 years ago? You got a 30-year mortgage. Your monthly payment is $2,000. Well, how great has it been since 2020 to watch your monthly payment stay the same while the cost of everything up goes through the roof? And eventually you'll be able to walk out onto the street and pick $2,000 up off the ground and then walk into the bank and pay your mortgage for that month, because they have rigged the rules and abused the system so much that it makes sense to borrow money instead of lending money. And that concept is just one of the concepts that I've seen that has been flipped upside down from real world traditional Austrian economics into this modern monetary theory that just is it's almost like a doctrine of demons, to be honest with you. It facilitates the stealing of your fellow man's time and energy, the value of their labor. They work for the dollar, they put the dollar in their pocket, they pay taxes, then they go buy stuff and pay more taxes. Then they sell a profitable investment, they pay more taxes. You're getting hit tax with every other way. And then the biggest tax of all, the government printers just running 24/7, stealing every dollar that's printed steals pennies out of the dollars that you put into your pocket. And it's just a system of theft. And it's the same people who orchestrated 9/11. It's the same people who want to control the world who are accomplishing these goals by stealing our wealth. And then finally, Bitcoin comes along and solves that problem. You know, the famous saying, Bitcoin fixes this. And it really does apply across so many different spectrums and so many verticals. But Bitcoin does fix this. And that was my eureka moment for what we could do with Bitcoin moving forward to kind of be like the Trojan horse, I want to say, because I find that we're in like this weird spot where we see Bitcoin and we see dollars, right? And now we have like two major powers kind of fighting against each other. And my whole mindset is, how do I get these two separate entities to kind of come together, but to come together in a way where Bitcoin is the Trojan horse, right? The traditional system integrates Bitcoin, super excited and super happy. But then after all the orange pillars pop out of the Bitcoin Trojan horse, they realize, oh no, we're screwed. We have already integrated. There's nothing we can do. There's no way we can go back. And thankfully, I do think we're on that track. And Bitcoin bonds is my iteration of how we can put Bitcoin and integrate Bitcoin into traditional debt products to kind of flip the script, to get our pyramid the right side up again, where it makes sense to be a lender and you have to take risk to be a borrower. And this kind of meets in the middle because the lender gets rewarded by the Bitcoin performance, and it's the best performing asset in the world. So you're going to have the lowest risk, highest reward cash flow vehicle in the world. But then on the opposite side of it, for the lender, when they issue that debt, in this case, it would be U.S. Treasuries, but we're actually talking to a few different sovereigns right now. And one of them has about $3 trillion of oil in the ground. So, you know, the principal protected part of the note, it doesn't have to be a U.S. Treasury. It could be protected by a real world asset like oil in the ground. So it just depends on who the issuer is. And what that does is it takes the risk away from the lender, because they don't have to issue the note at such a high rate. The country that we are talking to, the last time they issued a note was at 7.5%. But if they come issue a Bitcoin bond, they can save 300 basis points. So it's actually lowering their cost to issue debt and then attracting liquidity by offering the yield in the form of performance of Bitcoin. It's a lot like what Michael Saylor is doing, just a different method. Instead of through a stock in a corporate company, it's through a bond. And that's one of the biggest obstacles right now. I think the biggest obstacle is probably capital gains tax. But after you get by that, the second biggest obstacle is when you go talk to some of these big money managers in the world, you know, the first thing they say back to me is, listen, son, you're talking to me about investing. We're talking about lending. This fund has been alive for 250 years. And you think we're going to go make a risky investment? How are we to justify that? I'll be gone within 2 weeks if I make that investment. We like to lend our money. We like to mitigate risk by lending, not take risk by investing. And that's what Michael Saylor has been saying. He's saying, well, look, you got this Chinese businessman who believes in Bitcoin and understands the oppression of the Chinese government. He can't buy Bitcoin. He can't buy the Bitcoin ETF, but he can lend money to a corporate company who then what they do with that money is leverage up on Bitcoin. So he's getting exposure to Bitcoin through lending his money to a corporation, but through a corporation that is a convertible note into a security. With Bitcoin bonds, you're lending your money into a bond, which is automatically converted. You don't have to convert it into a security. It's converted back into dollar yield. So it's a little bit of a different strategy, a different take coming from the bond perspective rather than a corporate stock issuance perspective. But I think the marketplace is going to see the value in that, especially with the principal protection part, because that's a Bitcoin bond from people's reserve. It is a principal protected note. We just call it a Bitcoin bond to help people make sense of it. But the point is if you lend that $1 billion, like in that example, if Bitcoin goes to zero, which you and I know is not going to happen.
Yep.
So but some of these people who we're talking to, sovereigns and fund managers, they do think Bitcoin can go to zero. So you're not going to get anywhere if you sit there and argue with them how it's not going to go to zero. Right. And then if you try to teach them about number go up technology, such as the absolute digital scarcity and how the difficulty adjustment provides sustainability when it goes down and drives the cost towards the price when it goes up. It's literally strategically designed to leverage the natural laws of economics to empower we the people. That doesn't get far with these guys. So you just have to concede that point and tell them, yeah, hey, if Bitcoin goes to zero, well, hey, if Bitcoin goes to zero, when the issuer's note matures, you'll have your principal back. So it's either going to be backed by the US printer, or it's going to be backed by oil in the ground, or it's going to be backed by the company's balance sheet. And that makes a lot more sense to them. And then what's really interesting is Bitcoin can underperform. And even in its underperformance, it's still overperforming relative to the bond market. So if Bitcoin goes down 50% in the next 5 years, which you and I also know is unprecedented, that there's no price precedence for that. But even if it did go down, in that example, you had the 800 million, it matures to $1 billion. You bought the 200 million, but it went down 50% to 100 million. Well, if you take that 100 million, you do simple interest terms, that's 10%. 10% divided by 5 years is 2% APY. So when interest rates go back down on the long end of the curve for notes and bonds, we're going to be around that 2, maybe 3% mark. So a Bitcoin bond with Bitcoin negative 50% performance is going to match a government debt instrument from the note and bond curve of the yield curve. So that's really interesting. But then if Bitcoin does what it's supposed to do and what it was designed to do and engineered to do, I love to call Bitcoin engineered money. It's not happenstance that the price discovery is working the way it is. Right. If it goes up and it keeps its 60% CAGR rate right now over the next 5 years, that's a 10x in price for Bitcoin in 5 years. That's $600,000 Bitcoin. Well, that turns your 200 million into 2 billion. So now that note now matures being worth 3 billion or 200 billion. And that's 40% APY. There is nowhere when you sit down at the table with these guys and you tell them 40% APY is a potential outcome, or even if Bitcoin doesn't 10x, it just 5x's, 20% APY. This is a potential outcome based on our previous performances. The first thing they think is, well, wait a second. If I want to get this, I got to get into junk debt. I got to lend into the credit card, just junk debt markets, where a lot of times you see default and that debt sells for pennies on the dollar. But in this case scenario, you have principal protection, and then because Bitcoin, the best performing asset in the world, is providing the yield, you have crazy upside numbers that just haven't been seen before in the field of finance. So Bitcoin being integrated into these debt products is a win for the lender. It's a win for the borrower. It turns these upside down economics right side back up, and then it gives us a way to get Bitcoin integrated into the system to fulfill that Trojan horse role.